What is missing in Paytm stock? It's almost 3 days had gone, and the first 2 days has been like 40% down, and then there is a small break, and then when it started, slowly the stock is recovering from the bottom, but still 20% lost from its high. So we will discuss more about Paytm in this today's video. Thank you so much for watching. Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book Money Leaks, one page stock market plan and one page mutual fund plan. Please check the description so that you can go and read this book for free in Kindle Unlimited, or you can purchase this book for a smaller amount. And what is Paytm company is all about? It's a big question mark because that is what the valuation expert Ashwath Damodaran has even asked it. Are they chasing one rabbit? Because if you're chasing one rabbit, this is a common terminology in business discussions. If you're chasing one rabbit, for sure you will catch it. If you're chasing multiple rabbits, you don't know which to catch and it will start jumping and going off. You will not catch even one rabbit, right? So that is what it's all about. It's a startup. It started in early 2010 and still it's called a startup, maybe according to me, because they are almost chasing one vertical after the other. While started, they provided services like online mobile services, providing pin code services or something like that in the starting beginning, and slowly they transformed into a UPI company. In 2016, during the demonetization, they gave the big ads thanking the prime minister for doing this and how India can become a digital India, all these things. But right now, Google Pay has overtaken everybody. Phone Pay has overtaken. BIM app by government is there. All the banking companies are providing UPI transactions. So Paytm has lost it. They have the customer base of more than 50 million or whatever number, but how much profitability they are making with every customer? And they ventured into movie tickets, they ventured into railway tickets, they ventured into bus tickets. They had created Paytm Mall, I think the time when Flipkart and Amazon started their war in, I think 2010, 11, 12 time period, and they lost the war and they came out of it. And still it's there. Paytm Mall is there. Is it profitable? A big question mark. And then they started selling insurance. They started selling insurance policies. They got into mutual funds. They started broking. What else they are not doing? Everything they are doing, but are they doing any one thing in a better manner? That is what my guru, my mentor also used to ask me. Can you be better at one thing over a period of time so that you become master? But what master Paytm is all about? They are a payment company. They got payment small finance bank license, but I don't know where it is right now. And they are there in all the fintech spaces. They're calling themselves as a fintech company. But what is the business model they are following? And when it is questioned, the CEO himself said that our business model no one can understand, but it will become so huge, it's so big, and still that is what vague answers. Okay, and if you look at, are they going to focus upon, now they're saying they have a huge cash resource, they're going to lend that money and based on that they will get the profitability. Lending means you need to get the retrieve the money and you need to get the interest. How many people will repay? And there is a gross non-performing asset points, NPA, which will start increasing. All these issues are also there. What will happen to that? Right, again a big question mark. And it's a forthcoming model, the next business which might do good, and that is what they are projecting. We are going to do this and we may create profit. But what happened for the last 10 plus years? What has happened to the profitability? They are at loss. They got the money from the bigger venture capitalists, they entered the stock market, they took the money out and they are happy seeing the profit. But what happened to the all the retail investors who jumped in? And what the valuation expert Ashwath Damodaran says questions the model the right way, right? That is what it's all about. And another point is referring the successful startups. And he compared himself with Tesla. Again, it's a big question mark because just look at Tesla was started as an EV company where they are discovering one thing. They are focused on one thing, which is electricity vehicle. When nobody was there, they focused on that. They created the model. They started building upon. They are reducing the cost, and it took 10 plus years. Now it's a biggest business model. The stock has skyrocketed. Comparing Paytm with Tesla, it's a product company. Tesla is a electricity vehicle. It's a product company, maybe one of the first. Now many companies are competing, and the competing nature may change in the next 5 plus years because if BMW, Toyota, every company are launching EV, what will be the differentiating factor for Tesla with other companies? That is the point. Similarly, for Paytm, What is the difference? What is a unique factor? What they're going to focus upon for the next 10 plus years? And it's a service industry. How much profitability? And lending, there are many companies already. And UPI, as I said, Google Pay, Phone Pay, every company is there. And in case of insurance, Phone Pay is also doing the same thing. And it is valued at $9 billion. And Paytm is valued at $20 billion. Without profitability, how can it grow? And right, all these are vague questions, no answers. And he started comparing himself with Tesla. Right, it requires grit and determination to run the company, all well and good, but when you want to list it in the stock market, there are certain things, and there should be profitability visible, everything should be there. And any company which has grown big in US, like Facebook or Google or everything, there are hundreds of companies which has vanished out of the market after launching, and hundreds of venture capitalists lost their money in that. And we are seeing only the profitable startups. Comparing the existing company with the startup requires a lots of analysis, right? So that is the reason Macquarie, one of the biggest uh, financial domain company, they said that on the day of listing, this stock can go up to 1200, and Paytm has went up to 1271, and they didn't change. On the day of listing only they announced. If they had announced that the valuation is so low, poor, even during the time of IPOs, many retailers would have jumped up. They wouldn't have got logged in. And today, the stock has recovered. I think on November 25th, the stock has recovered a lot. And automatically, the stock is trading still a 20% loss, but the stock has recovered a lot from the bottom of 1271. It's around 1770 or something. And stock can recover in the short term. It is possible, because it's not like on a daily basis, no one can predict. And why the stock has moved up? Because the people like the higher institutional investors are averaging the stock price, and they are believing something about the company, they are investing it, and they have huge pockets. It's not like us, right? They have huge pockets, but retail investors, be cautious if you're not sure. And in red herring prospectus, they would have mentioned about the risk factors. Any company, any IPO, they will clearly say what is the risk factor and when they will become profitable, or already they are profitable. When it comes to Paytm, they said that they are not profitable. They are not they may not be profitable even in the 10 years down the lane. And big claims are being made, like we are going to become big. What about the other fintech companies? Will they keep quiet? They will also become big. They will compete. Already there are banking and big companies which are already growing, right? So all these points says that the tough situations in Paytm will be there. And if you are somebody who can handle all these points, yes, you can continue your investment or stay invested. And if you want to be cautious enough, think twice, maybe think thrice, and see whether you want to exit at profit. Just watch the stock price, how it is moving. And if the market is recovering, you may see profit. Some people buying these stocks. Market is getting punished, then the stock price can still go down. And Macquarie has given the stop loss of the target price of 1200. Right now it's around 1770 or something. So be cautious with respect to the Paytm stock or any IPOs which is coming from now on, because lots of stocks are happening. So many companies are going to come up. But what is the business model, and is it suitable for you? This is even particular. If you are a retail investor, is this IPO suitable for you? Can you handle the volatility of these companies? Thus, this matters a lot. So think twice for the forthcoming IPOs in startups. And if you are somebody who wants to invest in IPOs, look at all the rest of the companies. Latent Analytics, profitable company, it got debuted with 179% profit. And other company like even the Star Health Insurance is going to come up with IPO. That will also become profitable, I believe, because Rakesh Jhunjhunwala has invested. Already his investment has given three times the return. So that will always have that may cause a bigger hype about the stock, and it can also be listed in profitability, because last 2 years everybody had taken a health insurance. They are ready to take health insurance. So these things matters when you're analyzing a company. Please be clear, only with 100% conviction invest. Just because you applied a IPO, you think let it come. If it not comes, I don't mind. If And many people who got allotted, they thought they won't get it, and they applied for IPO. They got allotted on 2 days. They are at 40% loss. What they thought is they may sit at 40% or 100% profit. So this can happen to anyone. That is the reason I never jump into IPOs. This I am sharing because market is in a precarious position, and I just wanted to talk about the valuation. At end of the day, the profitability matters. At the end of the day, cash flow matters. How much free cash flow is generated. nobody likes to, and as a retail investor, don't chase these kind of companies. Okay, only if the earnings are visible, get in, or else there are thousands of companies, few hundreds of companies which are doing really good. Enter those alone by doing proper fundamental analysis. Check the link in the description if you want to join my stock market investment blueprint course so that you are learning all these points and investing. Thank you so much for joining today.